Want to invest like a pro and avoid costly mistakes? In today's video, we're breaking down the top do's and don'ts that successful investors follow to make consistent profits in the stock market. Investing in the stock market can be thrilling, but without the right strategies, it's easy to make costly mistakes. Pro investors have specific habits that help them succeed. And today, we'll dive into the core do's and don'ts that can help you avoid common pitfalls and build wealth effectively. First up, do your research. Pro investors never make decisions based on hype alone. They thoroughly analyze a company's financials, look into its management team, understand its industry, and stay updated on any economic factors that could affect the stock. Taking the time to do proper research is the foundation for smart investing. Example: legendary investors like Warren Buffett and Peter Lynch spend hours reading annual reports and financial news before investing in a company. Don't chase trends or invest based on fear of missing out. FOMO. When certain stocks become popular, it can be tempting to jump in. But pros know that following the crowd often leads to buying at inflated prices. Instead, focus on your own analysis and avoid jumping into investments just because they're trending. Example: many investors who bought into meme stocks learned the hard way that hype doesn't always equal value. Do diversify your portfolio to spread risk. Pro investors know that it's risky to put all their money in one stock or sector. By diversifying across various sectors and asset types, you're better protected from losses if one industry faces challenges. Example: think of it like this. If you had investments in both tech and healthcare in 2020, the tech stock boom and healthcare's steady growth would balance each other out. Don't let emotions guide your decisions. The stock market's ups and downs can make you feel everything from excitement to panic, but pros know it's crucial to stay calm. Emotional trading often leads to rash decisions, like panic selling during a downturn or overbuying during a peak. Tip: one strategy pros use to stay level-headed is setting rules for buying and selling in advance, so they stick to their strategy regardless of market conditions. Do focus on long-term growth. Successful investors understand that building wealth through stocks takes time. The stock market can be volatile in the short term, but over the long term, the general trend has historically been upward. Having a long-term perspective helps you stay patient and avoid reacting to short-term dips. Example: investors like Warren Buffett often say, "Time in the market beats timing the market," meaning long-term investments tend to perform better than frequent trading. Don't ignore risk management. Pro investors always assess how much they can afford to lose and set limits accordingly. Stop-loss orders, for example, help prevent heavy losses by automatically selling a stock if it drops below a certain price. Example: if you set a stop-loss at 5 to 10% below your buy price, you can prevent one stock's performance from dragging down your entire portfolio. Do keep learning. Pro investors never stop educating themselves. They're constantly learning new strategies, studying market trends, and staying informed on economic news. By expanding your knowledge, you're better equipped to spot opportunities and avoid common traps. Example: whether it's reading investing books, following financial news, or listening to experienced investors, continuous learning is key. Lastly, don't ignore your own financial goals. Pro investors tailor their strategies to fit their goals, whether it's retirement, education, or building a safety net. Make sure your investments align with what you need financially and what your timeline looks like. Example: if you're investing for retirement decades away, you may be able to take more risks than someone nearing retirement who needs steady income. To sum it up, pro investors succeed by staying informed, managing risk, and focusing on their own financial goals. Avoid the hype, stay patient, and remember that smart investing is a journey. Thanks for watching. Be sure to like, subscribe, and hit the bell for more tips on building your financial future.